if you own a home, and if, let's say, you have an office outside of the home, you don't work primarily or only in the home, then you can write your whole house, basically rent your whole house to your business for 14 days tax-free and hold your corporate board meetings in your home. And so that it's an easy 14-day deduction. And let's say your house is worth $500,000. You can do $500 a day or whatever the fair rental value is near you times 14. It gets you an easy deduction for those meetings.
Hey, what's up? Welcome to Life Inner Show. I'm your host, Jason Wojo. On the Life Inner Show, we help people make more, work less, and live awesome lives. I am joined by Polish Peter, the co-host of The Hour. What's up, dude?
That's right, man. But I have one concern. I don't know if we actually should make this interview go live. Granted, there were some great strategies that we shared, but I think most of the interview is basically making fun of Peter. So I don't know if that's actually should be out there.
There was a good amount of that. And so if you're in for entertainment, that's one benefit of this episode. But here's a bigger one, man. We have Melanie Sikma and her dad, Byron McBroom, on here, and they're going to talk about tax savings. Now, listen, before you're like, taxes, that sounds horrible. No, Listen, this is awesome. There's some super cool, creative, legal, no gray area here, okay? Legal ways to really cut back on your tax bill, especially if you're an investor or a business owner. And by the way, if you're not that yet, you have to be one, because the taxes that you'll save absolutely destroy what you can do with W-2. And so we're talking with that man. We have a ton of content here, a ton of nuggets that people can take with them.
Yeah, if you have kids, you should listen to this episode. You have parents, you should listen to this episode.
Yep.
If you have a company and you need to have going on vacations and, picking different places, you should listen to this episode. Meals, all kinds of different things. And I love how they basically structure it, because it's, he mentions at the beginning of this particular interview, he says even a Polak can understand. So, that's it. And I did understand. And this was a really great way of actually distilling some mystical things about tax strategies that actually anybody can understand. So
absolutely,
let's do this.
Here we go. Here's our interview with Melanie and Byron. Melanie, Byron, I'm so excited for you guys to be on Life in Our Show. Thanks for joining us.
Thanks for having us.
Great to be here.
And so, guys, Byron actually came up with a great tagline before we even started recording, and it is this: they run one-stop tax strategists, and they can explain and help you with taxes even if you're a Polish person. And so.
So on that note, I'd like to be compensated in some shape or form for this tagline, because I was the source of it. So, yeah.
Well, the check's in the mail, Peter. Don't worry about it. So guys, listen. So this is such an important topic that I'm really excited to dive into, because, so many investors, so many business owners are focusing on generating revenue, not realizing that revenue is going right out the back door in terms of taxes because of lost opportunities. They haven't really thought through the different tools, the different vehicles that are available to them to really help them keep that hard-earned money. And so let's just dive in right into the meat and potatoes here and start talking about, like, what are some of the most overlooked tax strategies that you guys see investors, particularly, I mean, we can include business owners in there as well, as if it's relevant, that you see them miss, that are unnecessarily costing them money?
Yeah, it's pretty much all lumped in, and it's entrepreneurs, investors. The idea is just making sure that you're being proactive, that you have a tax professional that has your back. The overlooked ones that we see are the ones that utilize the people around them. So their kids, maybe their parents, maybe their in-laws, their kids in college. The idea is to look at the people around you, look at the lower tax brackets around you, and how can we pay less tax as a whole and work together to pay less tax. So that's, to me, I don't know, Dad, maybe you can expand on that so that we can give some details.
Well, one of the things I see a lot is a lot of times people are pretty good at having a dedicated bank account, and they pay all their business bills out of the dedicated bank account. But you'd be surprised what business bills they pay out of their personal accounts. A lot of times we'll take and go through somebody's personal account, and you might find some car insurance, you might find some, gasoline, you'd be surprised, but just take a gander through your personal accounts and see what can possibly be deducted. So that's a good thing to do too. We did that for one guy, and it was almost like $40,000 of money that he had spent personally that would never have been deducted had we not do that.
Yeah.
So what are some of the things like, I think a business owner, some of the obvious deductions that we all think of are probably front and center for most business owners. Like, hey, I'm going to deduct my office. I'm going to deduct my office supplies. But when you talk to me a little bit about creative things that are legitimately able to be deducted that many people miss.
Well, for example, if you get health insurance from your spouse's job, or maybe you have a W-2 on the side, or, your business is on the side, you can have your business reimburse you for that health insurance expense. And so that's just a creative way to turn an expense you already have, a personal expense, and put it into a business deduction.
So hold on a second here.
Now,
So,
let me elaborate a little bit on that. That would be the insurance that you pay for after taxes. As if it's provided with your employment, it's not deductible. But if the employer is taking something out of your paycheck to pay for your spouse's coverage, your family coverage, and that comes out of your after tax dollars, then you can have that be reimbursed by the business, and then take it as a health insurance deduction for the business.
and that would be only for you, or you could do that for like your spouse or something like that too?
It'd be for your spouse and your family's portion of it, because normally the person's covered on the health insurance, and that's paid for totally by the employer. But a lot of times they only cover the employee, and they don't cover the family, and the people pay extra for that. Well, that extra portion, we can make a deduction on your tax return.
Got it. All right. I'm loving this. Like I'm going to take notes here myself. What other kinds of things do you guys see frequently missed? And one thing you alluded to, Melanie, that I've never really thought of it this way, and I've never really heard, is like, look at the people around you. Mm-hmm. Explain that concept. What does that actually look like?
For sure. So, for example, a lot of people know this is, if you have kids under 18, you can put them on the payroll. I have a 6 and an 8-year-old. And so they're my little models for my business. I use them on my Instagram. I use them in speeches and on our website. And so I pay them close to $14,000 a piece tax-free. So $13,850 is the actual limit. You can pay them above that, but, it's reasonable pay for reasonable work. So modeling, I felt comfortable with the $13,850. Other people like to go above if you want to push it a little bit, or if they're older and they can justify a higher wage, you can go higher than that. You'd pay tax, but it's just at a lower rate than you. One thing my dad does with my grandma is he set up she's 90 years old, super low tax. They're the lowest tax bracket in California. My dad's at the highest. And so he set up a separate corporation owned by her. She's a passive owner, doesn't have to work for the company. And he just hires that company for services. And so he has that company show about $84,000 worth of profit, and that money is taxed at her rate instead of him. So it saves him about 40 on his tax return. And for her, she pays about 10. So it saves a net savings of 30. And he's able to use that to support her, let her live off of that. And then she gives back the difference. So
wow.
Like that.
So is she the sole owner? Is that how that works?
Yeah,
the majority
would be the owners. I'm the directors and the officers, so I do everything. She doesn't even sign on the bank account.
Got it.
But every year I get elected as officers again, and this way, I support her anyway. But
yeah.
This came about years ago when she said, "Oh, you should claim me as a deduction on your tax return." It's back when my dad was alive. So I said, and then I figured out, oh, this is a lot better way to do it. So that way,
figured it out after we all graduated college, because we do this for kids in college too now. And he had 3 kids in college at the same time, and he figured out our college plan, that we call it, after we all graduated. So,
yeah, I spent $300,000 putting these kids through college. They have to have a big beer fund.
Did you get anything back for that? By the way, Byron?
I got nothing.
Hey, we're business partners now.
So how fruitful is this, really?
But what you do for your kids in college, now I got to say that for kids in college, there's a couple extra rules you have to look at just to make sure it qualifies. But you form a corporation. The corporation provides a service to your business, and then what you do is you have that money taxed to the kids. We like to have them make a profit of about $40,000. The tax on $40,000 happens to be $2,500, which is almost exactly the same amount of education credits the kids can take. Normally, the parents make too much money and they don't get education credits. So this way, if we put income into the kid's name at $40,000, they have $2,500 in tax, and then the education credits wipe that tax out. So they basically get $40,000 tax free. What we like to do is we like to have that corporation then make a distribution to the kids, and the kids pay for their own education, their own whole room and board, their own everything. We've even used this strategy to help someone who was living in California that had a child going to school in Arizona, and they used it to have the kid be financially independent, and they qualified for in-state tuition, within a year of doing that. You have to there's a lot of other things to do with that. You have to make sure they're paying their own cell phone bills, their own car, they register to vote. They do everything in Arizona.
Yep.
But it's a way to get in-state tuition where normally you wouldn't qualify for it.
Wow. They haven't thought about that.
Yeah.
And so
now, let me go back to the kids' payroll. There was a recent court case on this where people have had it thrown out, and there's things that you need to make sure you do to qualify for it. We talked about reasonable work and reasonable pay, but what the IRS wants to see, one, they want to see that you file payroll forms, okay? And there's a better way to do this. If you pay them as a sole proprietor, or a single member LLC, you don't have to pay payroll taxes on it. If you're incorporated them and you pay them through your corporation, you have to pay payroll taxes on it. So that's an additional 15 to 20% savings. But they want to see hours. They want to see what they worked, with reasonable work, reasonable pay. That's the whole reason we like to do models, because models make between $125, $175 an hour with a 2-hour minimum. So it just takes a lot less record keeping, but you do want to have a record of what they worked. If
you're already taking pictures of your kids usually and posting them.
And posting it on Facebook and Instagram and TikTok and whichever one you prefer.
So
but the IRS wants to see that logbook and of what you did and why it's reasonable pay.
So I have a serious question then, Byron. So looking, and how Peter looks right now, could we really justify, could we look an IRS agent in the face and pay Peter $100 an hour to take a picture of that mug?
I think that's too cheap.
That would probably be a vast overstatement. But it would depend on what you're advertising.
Put him in a diaper. You're good to go.
Byron, whose side are you on? I have the power to literally, I think, do nothing on this podcast. But
if you're advertising wrinkle cream, it might be it would be a very valuable thing.
Or adult diapers.
Adult diapers? Adult diapers?
I'm dying right now.
I'm checking out right now. Okay, you know what?
This is officially the funniest episode.
From now on, listen, everybody listening to this podcast, do not listen to Byron, okay?
Peter, you were asking how to get your haircut deductible. Just strap up an adult diaper. This actually makes sense. Your haircut, you're good to go.
Actually makes sense. I could deduct those. I mean, think about it, when we do the events, that's a big topic at the events. So, I mean, you could deduct it.
Well, and in all seriousness, people do ask a lot, like, what can I deduct and what is deductible? And you're giving us some gold here. And that's, the child thing I'd heard of in the past, and I always got intimidated by it because I'm like, gosh, like, can I really pull this off? Like the model idea. And for instance, I have a niece right now who is 11, and I'm like, well, I can have her like doing some office work for me. I can have her licking stamps, doing whatever, and that feels viable. And so I think it's probably just finding those real opportunities that are legitimate, of course, that you can use to save your money business, and you're doing something for your family as well. Before, Byron, when you mentioned the corporation for with your mother's account, when you say corporation, does that necessarily actually mean it has to be like an S corp or C corp, or can it be an LLC? Like, what does that look like?
Well, I like having an S corporation, because if I paid my mom the $80,000 and it was just a sole proprietor, then she'd have to pay self-employment tax on it, which is 15%. So that would cost me an extra $12,000. If I pay him as an LLC, if it's disregarded, it's going to have the self-employment tax. So you're going to be in the same boat. So if I do it as an S corporation, she doesn't do any work for the company, so you don't have to pay a reasonable salary. So that way it all is just to flow through straight to income, and you only have income tax. You don't have the Social Security tax.
Brilliant. Love it. So what are some things that investors and business owners can do to make sure they're getting as many deductions as possible? Like, where do they start looking? What are some of the rocks you want to turn over? Like, and by the way, like a leading question to this is I'm thinking of is like, many people probably don't know how to do this on their own, and they need help. And so they need to probably look for a professional like yourselves. Like, so if you could answer in that question also, like how do you start to filter out the kinds of individuals I want to work with to help me with this kind of stuff too.
Mm-hmm. I like to think of it like, so we bought a house a couple of years ago. We've been fixing it up, and my husband's pretty frugal. And so he likes to look for the people that are cheap first, but we kind of learned quickly that cheap doesn't always mean good. And sometimes it ends up being more cost in the long run when you find just cheap and no other value in the back end. So really your CPA or your tax professional should be a profit center for you. And the way to look for that is having somebody that's going to ask you the questions that are going to save you money. And a lot of the times we find that tax professional just asking questions to fill out the forms. And so, taxes is about as foreign of a subject as possible for most people. So you need somebody that's going to translate that for you. And so I would just say, find somebody that's going to be asking you questions that you might not even think to ask, rather than just saying, hey, what number should I put on this form? I'd say that's the best thing. And then just proper bookkeeping. My dad touched on that, but making sure that you have a separate bank account, separate credit card. We do have a tax course that might be beneficial just to teach the basic deductions as well as some creative ones. For example, we go to Hawaii. We've gone to Hawaii the last few years, and it's our partner planning retreat. And so we get a Hawaii trip deductible. So just little tips and tricks like that are going to save them quite a bit of money.
And there's some that on travel, you want to know how to write off meals. With meals, you need 5 things. You need the restaurant, the date, the amount. That's usually on the receipt. And then you just have to put who you with and what you discussed. Now, meals now are only 50% deductible. During COVID, they were 100% deductible, but now they're 50% deductible. The only exception if it's a team event, like you're taking all your employees somewhere. Travel, the way travel works, for your airfare and the cost of getting there, if the trip is more than 50% deductible, the travel is 100% deductible. So let's use our trip to Hawaii for an example. Let's say it's a 7-day trip or 7-night, 8 days. If I'm working on 5 of those days out of the 8, then the trip is 100% deductible for the flights. Okay. If I'm working 3 of the days, then the trip is 0 deductible. So it's important when you're mixing business and mixing a personal trip to have a logbook that shows that the trip is more than 50%. Now, a lot of times we recommend people put their spouse on the payroll for a very small amount. That way, when you're taking a spouse somewhere, you're taking a business, you're taking an employee, you're not taking a spouse. And that can make their stuff deductible as well.
And then if you work on a Friday and a Monday, you can also do what's called wrap the weekend. That makes that entire weekend a deductible expense as well, within the reason of meals, entertainment, all those rules.
So if you have a business day on a Friday, and you also have another meeting on a Monday, then since you had to hang around to have that meeting, it makes the weekend deductible as business day, even if you don't do any work.
So before we get back into this episode, I want to share something really important with you. One of the things that me and Vojo do here, I've been doing this for over probably 8-10 years now, is we've been running these events called Get a Life Getaway. And in these events, you sit down and you work on your entire life. You work on your vision for your entire life. And we literally dive into every single area of your life to show you, to help you create the vision that you truly deserve. Because if you notice from the episodes that we've been recording here over the years, is this vision is so important. It's probably one of the biggest missing elements in anyone's success. And if you look at the successful people that you see in life, they have some form of a vision that they follow. So I want to encourage you to go and check out one of our events. We do these events throughout the year. We have tens of thousands of people gone through these events, created their vision, and you'll be shocked to see what kind of a life they're able to create because of that. So head over to lifeonair.com. That's lifeonair.com. At the top of the page, there's a tab called Events. Click on that tab, and you're going to see everything that you need to know about that specific event, when it's held, where it's held, and how to get there. Now, here is the cool thing. Because you are a listener to our podcast, we want to give you 50% off coupon. Actually, we'll give you a little code that when you go to the checkout page, on the right side, you're going to see a promo code area. put this word in there, podcast. Podcast, hit apply, and you're going to get instantly 50% off coupon. Head over to the page. Don't delay. Do it right now before you go and do something else. All right, let's get back into the episode.
So here's a question, like what actually is considered work? Like, so say for instance, does it have to be a meeting? Can I just literally be on my laptop at the pool getting some work done? Is it like hours or is it days? Like what are those definitions?
Well, there has to be a purpose, a business purpose for you going to that location.
Okay.
And so for our partner planning, it's to get offsite so that we can have privacy, but also just get out of our regular space. But there has to be a business purpose for you going away, going to that.
If you read the book Scaling Up, which is a highly recommended book that I would recommend for people, it recommends that you have an offsite meeting every month, once a month. Okay. It also recommends that you have a couple days for planning at the end of the year, and then quarterly you have a 2-day meeting. That's their recommended agenda. So I did, to make this deductible, I'm saying, look, I'm just following this recommendations of these business experts, and they say to do this offsite. So we did it offsite, and I do it away, different time zone, because that way I don't have the interruptions and I get a lot more done. And we also do an agenda, for our whole trip, and we keep minutes of what we discuss. And that's what's going to give you the credibility when you do that.
So we could actually, we could send out, we have a little meals and entertainment cheat sheet for deductions that we can send out, as well as a sample travel agenda. If people want to shoot us an email at all.
Yeah, actually, give us your email right now. We'll talk about it again later, but just what?
Yeah, it's a long email, so I'll do a text. How about that? 209-924-4718. If you shoot me a text and just say, life and air, then I'll shoot you over the stuff.
Awesome. So could I go to Hawaii for a photo shoot for like maybe my YouTube channel? Or is that now they're like, I don't know about
Well, for your business, it probably would actually, because you're living
the dream
to the full, right? So would you say, Dad, that that's accurate?
Well, and being as far away from Polish Peter might be a business.
No, I was just gonna say, why are we having an event in Raleigh, man? What the heck?
I know
we should be doing events in some other places.
I know,
but the key would be to show an agenda of what you did on the days and the times, and you really want it to be, if you're just doing stuff on your own, at least 5 hours a day, probably to show that you're working the day.
Okay,
if you just do 20 minutes for the day. Take a couple phone calls.
You could have Peter here follow you around with the camera, so it's shows that you're living the dream. Another thing that I thought of when my dad mentioned scaling up in the meetings is the Augusta strategy. So it's a super easy strategy to be able to utilize if you own a home, and if, let's say, you have an office outside of the home, you don't work primarily or only in the home, then you can rent your whole house to your business for 14 days tax-free and hold your corporate board meetings in your home. And so that it's an easy 14-day deduction. And let's say your house is worth $500,000. You can do $500 a day or whatever the fair rental value is near you times 14. It gets you an easy deduction for those meetings.
Well, we live about probably an hour from the Bay Area, which in San Francisco, and the homes are, just a regular house is $2 million over there. So the fair market value of those houses is obviously quite a bit more expensive. We have some clients that get $28,000-$30,000 of tax-free rent from their own business because the homes are so expensive.
Got it.
Oh.
Wow. And so and by the way, I have Byron. I have your little book here that you so generously gave us here. Are there and I have many more questions, but I'm starting to already realize wow, we've only been talking a short period of time and we've talked about a half dozen different things. How does somebody learn about this stuff in the detail? Because I know that we're talking in somewhat generalities here, but there's probably some fine print here that they need to know to be able to really pull this off. How does somebody learn that stuff?
Yeah, well, we were talking about before we started recording my dad's do-it-yourself haircut, And really, it's not something that you want to do it yourself. Well, I'll just tell the story real quick. He tried to do his haircut himself because his barber was busy and he had to go fly away to speak. And I'm in the office and literally there's just patches everywhere. And so it just turned into a really fun making fun of him session around the office. And he ended up having to go get his haircut anyways before he flew. So this is something that, I've met with people that have tried to do it themselves. And most of the time, they're either not maximizing the strategy or they're doing it completely wrong. And that can cause red flags for audits or cause problems down the road that are greater than the savings that they're getting. And so it's important to work with somebody that understands that. And just make sure that you're meeting with your tax professional before the end of the year hits so that you're hitting all those deductions as much as possible. And that goes back to having somebody that has your back. We do offer a free tax assessment if anybody wants to see if they are leaving things on the table or overpaying on their taxes. That's just a quick 20, 30-minute call that I can ask a few questions, and it uncovers typically around $40,000 in savings on average.
Oh, no kidding. Wow.
The other thing we mentioned earlier was our Tax Essentials course. We're actually flying out to Ohio to record that in August. We've recorded it once, but now we're re-recording it to make it look prettier. And but that's going to cover just whole bunches of items, little short videos. There'll be little spreadsheets that go along with it. And we're going to actually throw that out for only $99. And included with that will be what we're going to call office hours, which once a month I get on the Zoom meeting, and whoever's subscribed can log on and ask unlimited questions during that time. That way they can get those questions answered. The book, if you've read the book, The Richest Man in Babylon, which is another great book to read, he talks about the 10 rules of gold. And in the book, The Richest Man in Babylon, the first rule of gold is a part of what I earn is mine to keep, which means you need to take part of your income every month and shove it into a pot. You never touch that, And then the second rule of gold is the guy saves his money up for a year and he goes together with the baker and they go back and they buy some jewels to resell them. And the guy sells them fake jewels. And the guy says, well, why do you go to the baker for advice on jewelry? Why not go to the jeweler? And you'll never beat a man. You'll never be as efficient as using someone who it's their trade to do. So it's like when you go in and you first want to start buying real estate, having a coach is just invaluable because they'll stop you from making the classic mistakes that a lot of people made. And you'll figure it out eventually. But I sold my business one time, and the first time it took me 10, 15 years to get up to a certain amount. The second time I built up my business, it took me like a year and a half just because I knew what I was doing. So you really want to make sure you have someone helping you that knows what they're doing.
The tax code is thick as if you put a Colt 45 and you shot it at you and you had it in front of you, it would not penetrate the tax code. And only 30 of those pages tell you how to pay. The rest tells you how not to pay. And so it's important to have somebody that understands that huge book because you don't have the time to learn it all. Sure. And you shouldn't. That's going to take away from growing your business.
Yep.
Right. So I got a quick question because obviously on this podcast, we can tell that Vojo is the one who does his own haircuts. So
he's got to throw his own little things.
He got one in. He got a little.
Dude, that's all I got. I got to do something because it seems like based on this conversation, by the way, I think between me and Vojo, I can deduct a lot more than he can. So
you got the most hair out of them too.
What's that?
You got the most hair out of them too.
That's right. Yeah. That's on his end. It's a jealousy that he doesn't have what I got in that. But anyway, here's my question for you guys, because one of the things that we're talking about is finding that professional, the tax strategist, the accountant, or CPA that's going to help you. And there's, I don't know, probably half a gazillion of them out there, and most of them, when you go in there, they say, I'm the best thing since sliced bread. I'm the guy who can help you. So me as a business owner, as an investor, what should I be looking for? What should I be asking? How do I actually get through the seat to actually find the guy or the woman, whoever it's going to be, that's actually going to be able to help me with this tax advantages?
Yeah. Well, go ahead, Dad.
Yeah. CPAs traditionally are very good people. They're very hardworking people, and they're very good at filling out the forms. what you really want is someone who's going to, and I think we might have mentioned this earlier, but you want someone that's going to ask you questions that can save you money. Someone that's asking not just, what, I need a copy of your mortgage statement. I need a copy of this, but, did you do this? Are you considering this? You also want to make sure that you have a thing where you can call them. Like at our firm, we don't charge for short phone calls because we want you to call when you have questions. We don't want to have that, oh, you did conversation. So make sure there's a free flowing of information. I've had so many people come in and say, yeah, talking to my CPA is like talking to that wall. They just sit and stare at you as you talk to them. And you want to have someone that's a good communicator that can speak in a language that even a Polish guy can understand.
See?
I'd say also
otherwise stress keeps on the back table.
Creative CPA is usually an oxymoron, right? It doesn't really happen that often. And so finding somebody that is thinking outside of the box, typically on our first call with people, it's a very common comment like, hey, I haven't even, my CPA hasn't even asked me that, or my tax professional hasn't even asked me that. And it's on that first call that we're already looking for savings. And so I think it's important to have somebody that's doing things correctly, but also looking for areas to save you money.
So I got to tell you, like, that has been a pet peeve of mine where I'll hear about a strategy. I'll mention it to my tax professional. I'll be like, hey, what do you think about this? And they're like, oh, that's a good idea. And I'm like, well, why didn't you I shouldn't be the one coming up with ideas for you. Like, you should be the one to come with me. And that has been that gets me going, let me tell you. And so tell me, like, that makes a lot of sense. So one question I think someone might be wondering right now is like, okay, you have play by the rules, color within the lines, stay far away from the lines, tax strategists, or they're probably not even strategists really. They just do things to just get it done, right? Check the boxes. Mm-hmm. And then you have an agency like your own who really is exploring creative ways to do things. Is there any additional risk of audit when you do that? And if so, and by the way, maybe there is, maybe there isn't, but even if there is, like, is it still worth it? Like, and by the way, an audit doesn't mean you did anything wrong. It just means they want to know more. And like, so how do you guys address that question? Because like, I can see how someone might be concerned with being too creative, but even if it's legitimate. So
documentation is everything. And, we've had an audit rate of half of the national average. And the reason for that is my dad, he looks at the book or the tax code as if, in the eyes of an auditor. He's talked to auditors. And so we train our tax team on those strategies where you get a code when you fill out that tax form. And for anybody else in that business, that line of business is going to have that same code. And so they compare your numbers in that code compared to everybody else's. What's going to cause a pull for an audit is something that's off on those codes or those numbers. And so what we do, if there is something off and it's justifiable, then we just put a note in there to make sure that there's, a reasonable explanation for that. And then usually that gets bypassed. Otherwise, if you do get pulled for an audit, you just have the documentation and make sure that we've trained you. And if you follow instructions, then we've been audited and we've won. We've been audited and lost. So the people that lost is because they didn't follow instructions well. Dad, do you want to add anything to that?
Well, a perfect example is charitable contributions. Okay. Let's say you inherited a bunch of money and you want to make a big donation. Well, so your donations are way, way higher than the average person for your income. Well, what we would do if our software kicks out a flag for that is we would attach the proof of the donations to the return. That way a lot of times they pull it, when they pull an audit, they pull the return out and they look it over and they say, but if the proof's in there, then they just put the audit back into the pile. So the audit rates are actually pretty low. Most people don't know this, but S corporation, a sole proprietor is audited 3.2% chance. Okay, S corporation and a partnership are only audited 0.4%. That's 4 out of 1,000. So it's fairly low audit items. So IRS is just grossly understaffed for this.
And it's usually because they have too low of officer payroll within an S corp, or they're not doing it at all.
Having no officer payroll with an S corp will buy you an audit and buy you some trouble. And plus, you don't realize it, but you're cheating yourself out of Social Security. For Social Security, they count your highest 35 years inflation adjusted. That's really a good thing to do. I'm in the process of doing a spreadsheet on that for people, where you can download your Social Security, payments into them, and you can calculate what your retirement's going to be. And then you can say, should I pay more or should I pay less? And that way we're paying that Social Security tax in intentionally, because you might get a 15 or 20% rate of return on paying that extra money. Sometimes it pays to pay extra tax.
I have another thought too, going back to the cheap's not always better. A lot of the times, if it's cheap and if they do a decent job, or people in taxes don't really know what to look for, so they might not even know if their person's doing a good job or a bad job. But if they're a lot of CPAs, like my dad said, they're good people, but they just have a ton of work on their plates. And so they don't really have time to learn about creative strategies, and they don't have time to, just build more strategies on their tool belt. And so what we've done to kind of, position ourselves against that is, my dad doesn't do tax returns anymore. His job is to just think of creative strategies and golf and show up for meetings. So he lives a good life there, but he's super creative, and he's kind of he's an odd duck, but it helps him on his taxes. Taxes are his art. And so what we've done is we just systematize a way to have creative tax planning. So any of our tax professionals, if they see something that's new or learn about something, we put that on a commonly shared list. And then we run that through with all of our clients at the end of the year to make sure that we're working together as a team to have these creative strategies for our clients.
That's awesome. Well, hey guys, listen, we're wrapping it up here on time. Tell people where I know you mentioned earlier the text, Melanie, but tell people where they can learn out more about your services, what you offer, and how you can help them.
Yeah. If they want to get more information, whether it's be added to our newsletter, we shoot out some tax tips regularly, and it's not to bombard your email, it's to provide value. That's our goal with that. They can shoot me a text, 209-924-4718. We're on Instagram. I try to do TikTok, but I just always forget. So Instagram's at One Stop Tax Strategist, or on my personal account. I post a lot too. Melanie Sikma is my handle. And then, we can offer a free tax assessment or shoot out those freebies with the meals and entertainment, the sample travel agenda. And then we have a flow chart for real estate professionals if they want to know how to qualify for that.
Amazing. We've also created a website. It's taxsavingsestimator.com, where people can actually go to this and self-assess what they're leaving on the table. But it takes about 4 minutes, and they just answer a few questions on it, and it'll say, hey, you're leaving this much on the table. You want to learn how to get it.
Love it.
And it's free, but they can just plug in those things. And like I said, most of these strategies are for business owners. We have strategies that you'll have to have us back on. We have actual strategies to get out of capital gains strategies. We didn't even have time to talk about those. We also have massive tax deferral strategies, where we had one client that was making about $4 or $5 million net, and we were able to get his tax down to $250. It was just a deferral, which means he had an interest-free loan from the government. But he took that money and bought real estate with it starting in 2010. And you can imagine he basically had $7.5 million of tax he would have paid that he invested. And if you had that much cash back in 2010, just think where you'd be today. So it's just about doing your taxes intentionally. It's about getting a second opinion, making sure that you're, just doing everything. We always say we want to pay as little tax as legally possible, but stay out of trouble, with a big emphasis on stay out of trouble.
Got it. Love it, guys. Thank you for your time, and thanks for being on Life Hacker Show.
Yeah, thank you.
Dude, I feel like I'm leaving money on the table, man.
You are.
I think I am.
Yeah, that's the thing, man. Think about it this way. I've heard somebody say one time, it's not so much about what you know, about what you don't know that really matters, right? And, having the right people on your team is, I think, really important, especially when you're growing a business. And I think one of those people is a CPA. It's someone who is really not only knowledgeable about the subject matter, but can be creative, like they were talking about it.
Well, and man, if you're a business owner and you are doing your own taxes and your own books, I'm just going to have to give you a virtual kind of like slap right now, because you should be working on your business. And not doing this. Like you just shouldn't be doing this. And, listen, we talked about a half dozen different advanced strategies, creative strategies that frankly, I'm sure, there's no way we're going to get into all the weeds on a short podcast like this of how to do this correctly. So more than anything, I wanted to kind of whet your appetite for some of the creative ways you can save money. Because here's what people miss, and I said this in the introduction, but as a business owner, deducting things that are legitimately deductible, you can live a better life making the same amount of money who has a W-2 job, because a W-2 employee doesn't have the same options to deduct things that a business owner does. And so, you can live on 20 or 30% less money and live the same exact life, or you can make the same amount of money and live, a 20 or 30% better life. And then when you take that and you add in, the turbocharge of being creative, now you really have a way to integrate legitimate expenses that you now can deduct against your taxes. Because listen, if you save 30 grand a year on your taxes, that's like you just made 30 grand. It's actually better, because if you made 30 grand, you get taxed on that. This is free money, right? This is actual gross top line money that you actually keep versus getting, just making 30. It's actually better than making 30 extra grand, because that's, you still have taxes to take out of that. And so I can't really overestimate how important it is to know these different loopholes, especially when it comes to things like, that you don't traditionally think of as being tax related, like putting your kids through college or helping an elderly family member, or some examples we talked about. Like, there's really creative ways to do this stuff.
Yeah, I mean, I've never heard before about having your kids, like a 2-3-year-old kid, be a deduction because they're a model. Like, I mean, I never thought about that. I mean, so one of the things that I want to encourage you guys, if you're listening to this episode, look for those people on your team. Look for that creative CPA. Reach out to them and have that conversation with them and see if they can help you. And the thing is, you might be thinking that you're saving some money by doing it on your own. I will tell you, it's actually costing you a lot more money, because the number of savings, deductions, or whatever that right CPA can help you they can help you see in your tax will basically pay for that CPA. And I think the great CPA, the really good CPA, basically pays for itself and actually makes your money. Oh yeah, it's not an expense. You know what I mean?
And Melanie said this is like, your tax preparer should be a profit source for you, like a stream of income for you, because they're finding you money that you previously would have missed out on. And, we talked also after we stopped recording the episode that, we're going to have him on for a second episode, because there's a whole lot of things we didn't even have a chance to cover. And again, you do your due diligence, all this stuff. Like there's all kinds, you got to be careful, and you can't just take a strategy and run with it.
Right.
You got to, you get hurt. So you got to know the details of it. But, more than anything, rather than taking a specific approach, I just wanted to kind of open your eyes to some of the different things that are out there that are possibly, valuable and applicable to your situation. Listen, hope you loved the episode. Hope you got something out of it. Hope you do something with this. We would love for you to leave us a review or rating. Like just give us a thumbs up. Give us a star rating that you feel is truthful, because this helps us reach more people. And together, you and I, we can all change the life of business owners, entrepreneurs everywhere, and just make people move towards their vision in a super cool way and help them get there. So we'll see you next week, everyone. Take care. Have a great one.